We begin this hour with the man who says when Ben stops printing, the party is over. This is the man who sent ripples through the financial universe. His name is David Stockman. He's the former President Reagan's budget director. David, welcome back.
Glad to be here.
Now, if I'm not mistaken, you say, and we've got a rally on our hands this morning. The Dow's up 14,750 almost.
Right.
You're saying that if Ben hints that he's stopping printing money, we go straight down.
Yeah.
But if he keeps on printing on and on and on and on, we've got a different crisis,
right,
and the market will go down. Is that right?
Yes, because we're in a monetary fantasy land. They have violated every rule of sound money that's ever existed. They've got the money market rates at zero. They have managed and rigged the entire yield curve, so nothing is real out there. It's all trading against the Fed. Now the speculators are basically saying as long as the Fed can hold the bond price up and the yield down and keep shoveling out free overnight money, it's safe to get in the trade. But they're not there to own it, they're there to rent it. It's all on repo, overnight money. The minute the Fed hints that it's going to normalize interest rates in some way, that trade will be unwound. The fast money will sell the bond, and then the slower money will sell the bond, and then pretty soon the mutual fund managers will panic. And where is the bid? Right now, the Fed is the bid. The Fed is propping up the price of the bond, and the Fed is shoveling free money into the bond market or into the Wall Street to speculate.
What comes first? Ben hints that he's going to stop printing, or some kind of financial crisis because he's printing so much?
Well, it could be either. I mean, we had the same thing when the Fed basically created the huge inflation of the 90s and the dot-com bubble.
Well, I'm looking for a time frame. All of our viewers, they want to know, all right, we've got doom and gloom, it's coming, it's coming, it's coming. Oh, when's it coming?
Well, you can't predict these things. They are like black swans. But you know if you're violating the rules massively, if you've disabled the price discovery mechanism, the interest rate mechanism of the financial markets, if everything's trading against what the Fed is doing, and bubbles are being created everywhere, and we have it already. We got subprime auto bubbles, a housing bubble started, the stock market is in a bubble, risk assets are in a bubble. When all of this is generated by policy that is so far off base, you don't know when confidence is going to break, but when it does, things will unwind very rapidly. This has happened twice in this century already. It's not speculation.
Wait a second.
Yeah.
Paul Krugman, he won a Nobel Prize for economics. He's writing in the New York Times today. This is no time for austerity.